Hey everybody, welcome to Things You Should Know, Tax Edition. Today we're going to talk about home office deductions. So first let me make this clear. I am at this moment not a tax professional. I do have experience in the field from many areas, but I do not practice tax accounting at this time, and this is not professional advice. Many small businesses use their homes as part of their business. If you meet certain criteria, you may deduct some of the expenses for those homes. This home office deduction is available for homeowners and renters alike. This can be used for all types of homes, including houses, apartments, mobile homes, etc. Starting in 2013 tax year, there are now two options for filing for home office deductions. The first is a new simplified option, and the second is the regular method, which was used prior to the 2013 tax year. The simplified option. For tax years starting after January 1st, 2013, for filing this year, 2014, a person has a simpler option for the home business deduction. This new system removes the old calculation, allocation, and substantiation requirements from the regular method. Instead of all those requirements, a person may deduct a rate by the allowable square footage of the office. This is handled in the following manner. 1. A standard deduction of $5 per square foot used for business with a maximum of 300 feet. 2. Allowable home-related itemized deductions claimed in full on Schedule A. For example, this includes you can claim mortgage interest, real estate taxes, etc. And the third one, no home depreciation deduction or later recapture of depreciation for the years the simplified option is used. And that's a whole big mess of things, and I really recommend if you're going to do things where you want to recapture depreciation, take it to a CPA and have them do it for you. What this means is a simple deduction, simple rules, with a maximum deduction of $1,500. The regular method has other options and requirements, including the ability to claim more than $1,500 in deductions. Taxpayers using the regular method must determine the actual expenses of their home office. These expenses may include things like mortgage interest, insurance, utilities, repairs, and depreciation. Generally, when using the regular method, deductions for home office are based on the percentage of your home devoted to business use. So if you use a whole room or part of a room for conducting your business, you need to figure out the percentage of your home devoted to the business activities. Both methods have requirements to claim the deduction. Regardless of the method chosen, there are two basic requirements for your home to qualify as a deduction. First, it's regular and exclusive use. You must regularly use part of your home exclusively for conducting business. For example, if you use an extra room to run your business, you can take a home office deduction for that room. Or if you have a garage like you're a mechanic and you have a garage, you can use that room. Second, it must be your principal place of business. You must show that you use your home as your principal place of business. If you conduct business at a location outside your home, but also use your home substantially and regularly to conduct business, you may qualify for home office deduction, but I would once again consult a CPA with that or another professional, as there's a lot of stickiness about that, and the IRS does look into that kind of thing. For example, if you have in-person meetings with patients, clients, or customers in your home in the normal course of your business, even though you also carry on business at another location, you can deduct your expenses for the part of your home used exclusively and regularly for business. Once again, get a professional opinion for that, though, if you're talking money. You can deduct expense for separate freestanding structures such as a studio, a garage, a barn, if you use it exclusively and regularly for your business. Once again, keep support for everything you do. Anything of value in that place, you want to make sure that you can show it to the IRS if they audit you. There are some additional tests your deduction must pass if you're an employee using a home office. A, your business use must be for the convenience of your employer, and B, you must not rent any part of your home to your employer and use the rented portion to perform the services as an employee for that employer. So basically, you can claim a home office if you're working for someone else, but you can't charge them rent to set up an office in your home and then claim it as a deduction. It doesn't work that way. If the use of the home office is merely appropriate and helpful, you cannot deduct expenses for the business use of your home. Basically, is it easier for you to work from your den than it is to drive into the town to work out of the office? You can't call it your office, home office. It doesn't work that way. They're going to want substantiation from your employer that is needed. Now, the complete detailed requirements of this deduction are beyond a simple YouTube video like I'm doing here. So I'm going to refer you to publication 587, business use of your home. In this publication, you'll find the requirements for qualifying to deduct expenses. This includes special rules for storing inventory or product samples or anything that might be beyond just a normal home office. It tells you the types of expenses you can deduct. It shows you how to figure the deduction, including how to depreciate your home. It gives you special rules for daycare providers. There's tax implications of selling a home that is used partly for the business, and you're going to want to read that if you are going to sell your home that has your home office. It also shows you what records you should keep. Well, that was it, guys. I hope that helped a little bit for home office deduction, and I hope to see you guys next time.